Welcome back to another episode of Stock Talk. If you guys are new to my channel, welcome. My name is Julie, and if you're returning, then welcome back. In today's episode, I want to talk to you guys about a stock that is about to have a split. Well, actually, we still have a few weeks remaining before it does a split, so that's a perfect opportunity for you guys to start investigating the stock and see if this is something that you guys want to add to your watch list and possibly to your portfolio. But before I do that, let's take a look at the overall markets. So looking at the triple Qs, we can see that the Qs started entering into the bear market back in, I want to say February. That's when they first entered into the bear market. And it has come out of the bear market back in March, but then we see it actually dipped right back into the bear market. So it's sure to say that the triple Qs have been in a bear market ever since February. So right now it is trading right around $302. And if we take a look at the SPY actually fell into bear territory just the other day. Let me actually zoom out into a different time zone so we can better see that. So that was actually just this past Thursday, where it was trading as low as $385. So it was very close to a bear market. But actually today it came right back up and it's trading right around $401. So we are in correction territory, but very dangerously close to a bear market for the SPY. So overall, of course, everyone is talking about recession, and yes, we've seen inflation happening, and with the Feds raising the interest rates. They just had another meeting the other day, but I'm sure you guys heard about that separately, so I don't really want to spend too much time on that. But I do want to talk about the stock that is having a split come up just in June. So the stock I'm referring to is actually Shopify. And if we take a look at the chart, we can see that the stock was trading as high as $1,700 back in November of 21. So this was one of the stocks that was definitely able to take advantage of the shutdown during Corona, where everybody was starting to shop online because nobody could go to the brick and mortar stores. And we've seen a drastic decline ever since. The stock is currently trading roughly 75% down from the all-time high. And there's probably some of you traders that are like, no, thank you, I'm not touching the stock at all. However, I think if you take a look at Shopify's business model, this is a great opportunity for you guys to get into this stock, especially with the upcoming split. Now, if we take a look at the 3-year history, I'm already on the 3-year chart. Let me zoom this out. We can see the stock was trading pre-pandemic around $600. And then when we had the crash in March, it dropped down to about $310, which it was trading at the other day. So if you were already able to pick the stock up when it was trading at $305 just the other day, that was fantastic. But if you guys didn't purchase the stock, I think it's definitely not too late. It's still a bargain in my opinion because it's still trading pre-pandemic pricing right around $400. And I did already purchase the stock. I purchased 10 shares because it's doing a split, which is 10-1. So if you have 10 shares, then you would have 100 shares after the split. And I personally want to trade the stock because I want to sell a couple calls against the shares. Because in the long term, I think this company is going to do really well. So let's take a look at Shopify to see what they actually do for those that are not familiar with Shopify. So the company was founded in 2004 and it's a Canada-based company which operates a cloud-based commerce platform which is designed for small and medium-sized businesses. And its software is used by merchants to run businesses across all sales channels, including web, tablet, mobile, social media, storefronts, and brick and mortar and pop-up shops. So this company is not only for the small business owners who took advantage of this during the pop, but it's also we've seen other companies entering this space as well. For example, some of the online marketplaces include Amazon and Walmart, and we all know Amazon and Walmart, so this is huge. So it's not just all the small businesses that are working with Shopify these days. And that through its platform, the sellers can also access critical services like payment processing, marketing tools, and small business loans. So really it's like a one-stop shop for anyone that has a business. So in short, Shopify is an end-to-end solution for omnichannel commerce, and its software empowers businesses to grow their own brand across multiple sales channels. That value proposition defines it from Amazon itself and has made Shopify the most popular e-commerce software vendor, both in terms of market presence and user satisfaction, according to a G2 Grid report. For context, Shopify powered 10.3% of online retails in the last year alone, which puts it in second place behind Amazon. So if we can pick this up at $400, and again, it's going to do a split, which is a 10-1 split, the share price would be $40. And obviously we're going to see the stock, have some volatility over the next few months and maybe over the next few years. And if you guys can't stomach volatility, then maybe this is not the right stock for you. But if you can stomach volatility, then I think this is definitely something you should look into further and see if you guys want to invest into the stock. So looking ahead, the management is putting its market opportunity at 160 billion, and the company is executing on a potential game-changing growth strategy. So Shopify recently announced a 2.1 billion deal to acquire Deliverr. That move will accelerate its ambitions to democratize fulfillment for merchants. Deliverr already provides fulfillment and logistics services to sellers on Amazon, Walmart, and many other popular platforms. So its network of warehouses and last mile partners will make it possible for Shopify-powered businesses to offer 2-day or next-day delivery to consumers across the United States. As I mentioned earlier, I'm expecting some volatility with the stock because there has been a net operating loss of 98 million, which Shopify will need to grow into its spending habits or cut expenses to become profitable again. And Shopify's management isn't committed to becoming profitable, at least not right now. Instead, management reiterated in their last quarterly announcement that its goal of reinvesting all growth profit dollars back into the business to pursue other multiple paths to grow instead of becoming profitable just right now. So it's going to be some time before they become profitable. So if you're thinking that, well, why would I purchase a company that isn't profitable? Yes, I understand. But to me, this is a great opportunity to actually pick up a company that I'm planning on holding for the next 5 to 10 years, because I can see this just continually growing over the next 5 to 10 years, because online shopping is not going to go anywhere. There's a lot of people, including myself, who have become very comfortable shopping online, even though, yes, we can go back to the stores, but actually I prefer the convenience of being able to just go online and shop for what it is that I need and have it delivered to my house, especially if it's going to be delivered within a day or two. Additionally, we take a look at the price to sales ratio. We can see that Shopify is currently trading under 10, which has not happened since 2016. So that is why I'm saying Shopify is pretty cheap at this price point. And again, I'm super excited if I can just invest $4,000 and purchase 10 shares and then have 100 shares by the time they split, which let's have a look at when they're going to be splitting. So they announced back in April that they're going to be doing a split, and the split payable date is on June 22nd, which means the split is actually going to happen on June 28th, which is a date. So that's still about 5 to 6 weeks from now. So you still have time to start acquiring your shares. And me personally, what I've been doing is I'm acquiring my shares, and if I'm up, I'm going to sell them because I'm taking my profit off the table, and then I wait for a dip and re-enter into the stock. But everyone to their own. You can also just hold on to the shares and not do anything with it at all. But I prefer to take profit off the table when I see fit, and that's what I'm going to be doing until they have the split date. And then once they have the split and I have the 100 shares, I'm going to go ahead and start selling covered calls. Also, some really exciting news that came out yesterday is that Affirm is extending the exclusive partnership with Shopify, which there has no terms been disclosed yet, but it's a multi-year exclusive partnership, and that's also really exciting. Actually, both stocks soared on that. Additionally, there was a tweet out from the Shopify CEO who said he actually purchased 10 million worth of Shopify stock. Well, I hope he actually did purchase those stocks, because that would be amazing if he puts his money where his mouth's at. But either way, I think this is a great opportunity for you guys to get into a long-term stock with great potential, especially if you can purchase the stock at a discounted price. And again, I don't mean the $40 a share that it will be trading at after the stock, but I'm referring as to what it's trading at right now, because again, so even if it just ran back up to $600 from here where it's sitting at $400, that is still a 50% return on your money. But as always, be sure that you guys do your own research, of course, and let me know if you guys are buying Shopify and what you guys think about the stock. And I'll see you guys in my next video. Until then, bye-bye.